Traders, Cousin Vinny coming to you from theclosingprint.com this Father's Day, June the 20th, 2021. In this edition of your weekend video newsletter, we'll discuss the weakness that permeates the markets. The Nasdaq is showing relative strength along with the London Stock Exchange as the British pound US dollar pair moves lower, and the Nikkei, which closed modestly green. The tech stocks that we follow closed mixed. Note the stocks that closed green, which are showing relative strength. We might trade some of those this week. Most of our indicators are bearish. We see 12 bearish, 4 neutral, and 4 bullish going into this week. That's telling us to be extra cautious, maybe hedge. We have a shorter list of stocks that we'll be looking at this week. The IBD 50, stocks showing relative strength. Stocks on the move in green, stocks on the blue dot scan in cyan, and 3 CanSlam candidates. Scans produced half a dozen stocks that could continue higher. I note ARK-K finished green as Kathy and her crew were doing some buying last week. Bukowski has 5 of 5 green with his CPI signal bearish at present with 53 bearish patterns, 0 bullish patterns, and 102 patterns waiting for breakout. Bottom line, we have support at 4160 and resistance at 4250. As we look for some gamma to build out some support below going into the month of July. Starting off the week, we note the dark pool trades and equity blocks that traded last week. Perhaps some of these stocks will see follow through again this week. In addition to the options flow that we saw last week as well on the bullish side and on the bearish side. So make a note of it. As the S&P 500 closed below its 50-day on Friday, with RSI showing room to the downside for more weakness. We did have a few distribution days, looks like 3 distribution days last week, Wednesday, Thursday, Friday, with oscillators approaching oversold, while ATR turns higher, showing that the ranges are expanding. And as we approach oversold, we want to note that seasonality is usually pretty strong for June and July, with the exception of 2013 and 2015, the S&P 500 closed green and higher at least 2 to 4% in the month of June into July, with the only exceptions in 2013 and 2015, and a little sketchy performance on that doji in 2018. As previously noted, the Nasdaq did close modestly higher and green for the week, as growth stocks clearly outperformed the value stocks last week as well. We're looking for more follow-through in both, with strength in the Nasdaq and growth stocks and weakness in the value stocks. If that should change, we should note it and trade accordingly. I would also note that including the S&P 500 equal weight index, we can see that we broke the 50-day moving average. However, we can see that CCI is setting up again, moves below the lower band at minus 100, sets up a bounce as it has in the past. So we'll be looking for that trigger as the number of stocks trading above their 50-period moving average has dropped dramatically from the 70 zone that we saw over the last few weeks down into the 30s. So only about 32% of the stocks are trading above their 50-day, which is setting up a potential reversal as well, like we saw back in October, November of last year. As support does start in this zone, just below price action here. In addition to the support that we see on the S&P 1500 composite, S&P 500, S&P 400 mid caps, S&P 600 small caps, still moving higher, yet to give us a red signal like we saw back in November, which turned into a buy signal shortly thereafter, with support down here just below. Histogram is still above the zero line, so we'll be watching for a bearish signal this week. Should that trigger, we'll probably add to or start hedges this week. The Russell 2000 weekly also shows us a double top potentially, with Fibonacci levels below, MACD and a bearish trend, and RSI still above 50. So there is a possibility of support in this area. Note all of the wicks that we've seen on the weekly time frame, as we have been building a range over the last few months, as well as using the small caps as a risk on, risk off signal, together with breadth, which is backing off substantially, approaching the minus 30% zone, which has led to bounces in the past. Make a note of it. S&P 500 in the top panel, mid caps, small caps, and the Nasdaq holding up the best, showing that relative strength. If these move to minus 30% and start to reverse, look for a bounce in the short term into what is seasonally usually a fairly strong period, June and July. Looking at different breadth indicators for the Nasdaq and for the NYSE, we can see that the Nasdaq McClellan oscillator, the black line, has peaked. We have some extremes on both the Nasdaq and the NYSE, which in the past have given us reason to look for a bounce, with these lower zones approached last week and tested right around minus 56 on Friday. VIX is also approaching an extreme. However, we have seen higher highs in the past. We do note that the 50-period moving average is in a descending pattern, so as we move away from the 50-period, it becomes more increasingly probable that will mean revert back down to the 50-day, which we can also see in the front month versus the 3-month VIX volatility indices. We're looking for a move higher this week. If we can get above 105, that would be an area where we would look for support. In the short term, there could be a left shoulder head and a right shoulder setting up going into the month of August, which is seasonally one of the weaker months of the year, in addition to September and occasionally in October. So if a head and shoulders top does play out, that would be something that we'll be watching for in August, September, and potentially October, depending on all this, how it plays out. In addition to what we saw with the Wilshire, which is a broad measure of market participation, Wilshire 5000, we can see the cycles have turned and could be peaking, obviously, in the rate of change in the bottom panel. Looking for a crossover, maybe predicts any more weakness, which we have support down below. So in the face of this potential weakness, we will be considering hedges to dampen the potential downside risk. In short-term trades, I'm not doing much with my longer-term portfolio, IRA and 401k positions. The bond stock ratio also tells us to be a bit cautious, as we're starting to revert potentially back to mean off of an extreme from the last few weeks. Bonds have shown a reversal underway, with TLT, the 20-year, pushing through an area of resistance. Volume by price tapers off now. We have the 200 period overhead, RSI rising. Have some of this in my 401k and IRAs, in addition to AGG, the Barclays Aggregate Bond Fund. Also with a Kirby here, you can see price action starts to run into some resistance, modest along this band just overhead. So that's a potential hedge as well. In addition to the strength that we saw in the US dollar, potential safety trade with resistance overhead. At extreme levels at the present time, we could still continue higher, but I'm looking for a little flag consolidation and then a follow-through. I think that strength is going to persist as economic activity picks up, which is reflected in crude oil, Brent, and West Texas crude, contrasted with the gold, which backed off dramatically last week on the strength in the US dollar. Now in an oversold zone, we're looking for a potential base. I still like this for an inflation trade, though this could be an indication that the trade might be over with as well, so we have to be reflective of that mindset as traders who bought early, considering the inflation trade, exit. So we'll be watching gold and silver for any potential bases at this point as extremes are reached in all assets. The sector heat map also more bearish, as you can see, with strength in leisure and entertainment, which makes sense. People are getting out and about. Modest strength in biotechs, with the international indices giving us the same caution signal. We can see VIX up here at extremes as well, with oil and natural gas looking for a follow-through as strength persists in those commodities related to economic activity. Also noting the exceptional weakness in materials, industrials, financials, while strength, relatively speaking, in biotechs, IBB, real estate at the 21-day, where we're looking for a pullback for a potential entry in the real estate, and technology, of course, showing relative strength. Look for that to persist. And surprisingly, we had a strength in consumer discretionary, which makes sense when you think about it. XLY, XLP ratio, you can see this is moving higher. So consumer discretionary is outperforming the defensive sectors, which is a little odd when you're looking for a pullback in the indices. As previously mentioned, we have a much smaller list of stocks that we're watching this week. I'm sure that you found others that look good as well. The underlying factor that I want to see in anything that I decide to trade this week is relative strength, like we saw with ARK, in addition to what we saw with Tesla and PayPal, which showed obvious interest, in addition to stocks like Apple, which showed relative strength, closing higher on the week, as Monday trading started off moving through the 50-day moving average, compared to stocks like GM, which pulled back to the 50-day. Watching the 50-day very closely, looking for a bounce. GM has a lot going for it. The EV stocks look very strong, with Li Auto, with NIO pushing higher, while stocks like GM and Ford showed less favor. Still watching for a pullback that gets bought. Right now, Ford is sitting on the 21-day moving average. Volume increased on Thursday and Friday. Again, with the IBD 50 stocks, I'm only interested in those that are showing relative strength, like QFIN 360 Finance. We saw CELH pull back. Looking for that to hold. This is day 7. Coming into day 8, if this pushes above the 21-day, this could be a potential follow-through trade. While Cricut CRCT held the 21-day, showed relative strength, RSI rising, trading in an area of very little overhead supply. This new IPO looks like it wants higher. Volume was above average as well on Friday. Cloudflare following through, NET breaking out to new highs, with RSI showing muscle, together with IPO's GLBE, Global E Online, an Israeli-based company that provides a platform that enables global direct-to-consumer cross-border e-commerce solutions, showing relative strength. Candidates like Pinterest also showing relative strength. We've got the 921 crossing through the 50-day. Nice bullish trend. I wouldn't necessarily chase it. I'd be looking for a flag and a push higher. Volume is increasing, showing institutions have been picking up shares at a discount to 52-week highs. Roku, another obvious IBD 50 candidate that shows relative strength. 2 bullish days last week, Thursday, Friday. Could be a third white soldier on the breakout above these pivots. Look for 52-week highs if this trend persists. I think it will. Exemplified by Shopify last week. Many of you were trading this as it blasted higher through that 1275, 1280 zone, breaking much higher last week. With modular home builder Skyline also looking very strong, pushing off after 6 days of consolidation. The 7th day we saw SKY push off the 21-day. RSI is rising, volume increasing, MACD's turning, stochastics probably one of the best setups this week, showing relative strength, with financials like Square showing up on the IBD 50 as well, looking for a follow-through. Smith & Wesson brands breaking out last week, volume very obvious, institutions picking up shares, while we wait for stocks like Up Fintech, TIGR, pulling back last week on Tuesday, looking for a follow-through and an eventual breakout to 52-week highs, while West Pharmaceutical also breaks out to 52-week highs. This is just trending. I wouldn't chase it. Look for little dips to the 9EMA like we saw last week to begin the week for potential entries, placing an emphasis on stocks that are showing relative strength. Persistent follow-through is what we're looking for this week in the face of weakness on the major indices. Additional stocks on the move last week. We had Adobe with earnings breaking out to all-time highs. DocuSign breaking out of a nice flag. CAI gapping up. All of these showing relative strength. American Outdoor, AOUT, with potential for a breakout coming off the 50-day moving average. Volume increasing. With all these stocks in green, stocks from on the move scan from IBD, looking for follow-through. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from closingprint.com. Happy Father's Day. Want to get out there and enjoy the day with the family for obvious reasons. They're yammering downstairs looking for me to finish my weekend video. I'll send out a watch list later tonight around midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to look for that. Bottom line, look for stocks showing relative strength this week. If we do see some persistent weakness in the indices, consider hedges to start the week. SPXU, SDOW, and bonds, 20-year and the 10-year looking most favorable. Take care, everyone. We'll talk to you soon.